Hi everyone. No news today, so let's get straight into the data and the charts. Then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with fear and greed, we continue to tick a little bit higher, up 2 points on the day. Still in extreme greed. We did hit that 5,000 level just for a moment and then sold off a little bit. We did see strength start to rally up here over the past few days, and that trend is continuing, while at the same time we're seeing breadth dip down. That is back into neutral, which is interesting. So we're seeing markets go higher with strength going higher, but breadth back into neutral. Put call ratio still in extreme greed, and then volatility still neutral, same level there. And then safe haven demand and junk bond demand back into extreme greed on both of those. So markets are getting more optimistic by the day. Not a great indicator, but as long as markets keep going higher, obviously price action is king. But as a contrarian metric, these are getting into some pretty extreme levels. And you can see historically, once we get into those low 80 numbers, that is typically the turning point. You don't get much higher than that on this chart. So just a couple of points higher from current levels would put us into those extreme levels where we start to see turning points. Moving over to seasonality, we're still in a neutral to bullish time period. We just had trading day 8, which was a step up as it was expected to be. And then as we push into tomorrow, flat, and then into the Monday session, pretty strong bump up, and then basically sideways price action for the rest of the month. When it comes to the Russell or the NASDAQ, and then Dow and SPX, looking at bearishness into the end of the month, and that's reflected on the calendar as well after the third week options expiration. Speaking of the calendar, you can see it here, bullishness through the options expiration, and then bearishness coming in after that into the end of the month. Moving over to earnings, AstraZeneca missed on the top and bottom lines, but more interestingly, Duke Energy missed on the top and bottom lines. I'm really interested in energy right now. ConocoPhillips missed on the top line, but beat on the bottom. So kind of mixed reviews there, and honestly mixed reviews kind of throughout the day here. Hershey's missing on the top line. Pretty decent amount of green here in the middle of this chart. And then looking at tomorrow, we do have Pepsi. And then on Monday, you have Waste Management, Principal Financial. That's just about it. So nothing major on Monday. Federal Realty, also interesting to watch. Real estate is a sector I'm pretty interested in right now as well, and we'll go over the rest of the earnings charts on the Sunday video. And then moving over to the economic calendar, you can see initial jobless claims came in better than expected. Previous number was revised up slightly, so still good there. Not popping higher like you would expect if we were headed towards that recessionary environment. And then you can see the 30-year note auction came in higher than the previous read as well, so interest rates continue to trend up a little bit. And then Fed balance sheet actually went up by $1 billion. That is absolutely not what I would have expected. Maybe that's because it did dip down so hard last week. And then going into the Friday session, there is really no news, nothing relevant for tomorrow's session. Moving over to Max Payne, sitting up at 493, stock price at 498. We're well above it. 515 call wall at this point. We are right at the top of the puts, pretty close to it. I guess 501 would be really the top of the puts, so that would give you another couple of dollars potentially. Call wall at 500. This hasn't been super reliable. We'll take a look at Max Payne for next week. On the Sunday video, that's going to be more important. But you can see there are still more puts here, at least in the short term, until you get out to that 515 level, which is a little bit bullish. So 489 and 495 put walls are pretty decent, pushing price a little bit higher towards that midpoint where you see the cross here at 497, then we're a little bit above that. So you could argue a little bit bullish. And then, like I said, next week is going to be super interesting. Moving over to the charts, starting off with the S&Ps, you can see we're basically sideways on the day. We did throw a wick to that 5,000 level on the SPX. We're still hovering right at the trend line off this upward trend. Still very much an uptrend. You can see we were up 0.04%, so basically a doji. Momentum bullish, RSI still bullish, still in overbought conditions, hasn't rolled over yet. Zooming in here, you can see that upper trend line is around that 500 level. Obviously the SPX and the SPY don't trade exactly at the same level, so 500 on the SPY is that upper trend line. I would expect to hit that before we see any kind of reversal. Just holding in the zone, looking for a bit of a push to that trend line. Moving over to the NASDAQ, a little bit different thesis. It did break out again here today, got all the way up to 433.44 and then pulled back a little bit. After hours were up a little bit as well. So on the day we were up 0.19, momentum still to the bull side. On the daily chart, hourly chart showing a little bit of weakness, but the trend is still holding. We're still above the 21 EMA, still above that highly traded zone here in the short term. Everything still looks good. We are just barely below the SMA on RSI on the daily chart, which is a little bit concerning, but realistically, you would expect this to push up to trend resistance around 440 based on the structure of this trend. So everything still looks bullish. No changes here to the thesis. Moving over to the Russell and the Dow. The Russell popped up today, so I didn't really expect that, but today we did see a nice strong push on the Russell. Rallied up early in the session, hit the 55, hit the trend line, candle close, candle open, continued the move up to that 144 EMA at 196.17, and that is where we finished here. So tomorrow, super interesting, gonna see if we can break that. If we do, then you're above all the EMAs and SMAs, momentum bullish, RSI bullish, and this could absolutely be pushing to some higher levels. So for me, I have 198.17 as my next higher level, and then above that, you have that 202 area, kind of at this neckline before this most recent peak up around 204.62. So interesting levels here on the Russell. Super critical point. If it breaks, I'll probably be looking to roll out and up on those options as a pretty clear breakout above all the EMAs and SMAs here on the 4-hour chart. And then looking at the Dow, basically sideways chop. So first candle was down, hit the 9, hit the VWAP. Next candle straight up, right back to those same levels. So on the daily chart, let's look at it here. You can see it was just about a doji, 0.08 to the upside, still holding below that level from the wick high on Friday of last week, 387.77. So we're not above that yet, and you can see we're actually down a little bit after hours. Momentum slightly bullish, but basically zero. RSI slightly bullish also. And obviously looking at the trend, you can see everything is still straight up. We're just at a critical point from that wick high. We have not broken out from there yet. Moving over to Apple and Tesla, we talked about Apple grinding along that 21 EMA yesterday and how it looked a little bit bearish, and sure enough, we broke down from that 21 EMA right down to the highly traded zone, and that's where we're chopping right now after hitting that 144 EMA. So this looks bearish. We're technically consolidation because we're stuck between the long-term EMAs, but we are below the shorter-term EMAs, which to me says bearish. So your support would be 186.81. If it comes down, touches that level and holds, then you could look for a push up to that 190 area. That's the same zone that we kind of rejected here previously. So you're looking for a push out, reject, retest, continuation if you push down into the zone and hold. But right now this looks a little bit bearish, like I said. And then Tesla did exactly what we thought that it was going to. Threw a wick down to the 21 EMA, didn't quite touch it, but it held that zone and then rallied to the 55. So interesting here. Could absolutely reject from that 55 as resistance at 191.03, but we're back above the level, so 188.50 for support. As long as that holds, you can be in good shape, waiting for consolidation and a potential break higher. But this has definitely shown some strength after that sell-off that we saw from earnings. We're still in that same zone that we've been in for a couple of weeks now, going back to 25 January. So in terms of structure, definitely consolidation, holding above a level, stuck below the 55 EMA. If it holds and breaks above, then you're looking for 197.75, which could be an interesting move. Momentum starting to roll over a little bit. Let's look at this on the daily chart, try to get some perspective. So we're above the 9 EMA. You have the 21 all the way up at 201.01, so that's above the level. Not super interesting. Clearly consolidation, clearly some structure coming through. Momentum ticking towards bullish on the daily chart, so that's interesting. First step towards bullish in a while. Last time we had bullish momentum is all the way back to 28 December. And the last time we had a step up was 27 December. So it's been a long time on Tesla. Clearly consolidation, could be looking for a nice little pop there. So a little bit of opportunity potentially on Tesla. Moving over to Pepsi and Broadcom. So these are the top gainers on my charts. Pepsi having a really strong day, 1.39%. You can see a pretty tight consolidation here in October, rallied up, and then we were basically sideways for a couple of months. And then most recently here, towards the end of January, we've had a strong rally from the lows up to current levels of about 5% on Pepsi, so pretty interesting move. We're still below that 200 SMA, which is not great, but we're above 167.47. That's kind of a long way to the downside. Really, you'd want to see this get above 176.75, hold that level, and then look for a push up to 180, 186, potentially in that zone. But this looks strong. You can see a base, rally, base, breakout. You need to see it get above this previous high. We're above the 144 EMA. Momentum bullish, RSI bullish. So a little bit of strength here on Pepsi, and then Broadcom continues to be strong through another wick to that level here at 1281. Ended up 1.41%. Momentum bullish, RSI bullish. AMD and NVDA were down just for reference, so Broadcom showing a little bit of strength. relative to its peers. Moving over to staples and discretionary, staples was down on the day 0.03%. It did throw a wick down as well, so this is consolidation just below 74, so that's a little bit bearish, momentum bearish. RSI still holding in there, but not great. We are below the trend line now as well, which is not great either. We've been below it a few times, and realistically we could probably add another trend, see if we can find one that makes sense. I guess right there is okay. It doesn't fully encompass this low, but it does touch the low here and then give you a potential support down around that 73.14 area, right in that 21 EMA area. I'll keep it on there. We'll see how it plays out tomorrow. Again, the trade here is get above 74, look for 75.40. Hasn't really done that yet. And then looking at discretionary is another pretty strong bullish day, 0.44. Closed above my short-term level, so 180.10 is the next level. So this continues to be a bit of a run. 180.10 is the price target. I would expect it to hit that level. Momentum bullish, RSI bullish, and then if that level breaks, you have 185.36. This was a clear rally, topping pattern, consolidation. Then you have a kind of flag setup. You would have considered this to be a bear flag, and then we broke to the upside back into this consolidation. Now we're breaking out. So definitely a tougher trade if you were trying to look for that as a flag setup. But you can see once we started to hold those lows right at that 170.68 level here, that would have been your potential move. And so far it's been good. Looking for 180.10 tomorrow. Moving over to oil and gas and energy. These continue to look very, very good. So energy continuing to trend higher here on the hourly chart. Let's look at it on the daily. Another strong day, 1.23% momentum bullish, RSI bullish, level 135.07 as a price target. Got the 55 EMA sitting in there at 134.72 as a potential resistance, but really at this point you would expect 135.07 and then the 200 SMA sitting at 136.31. And then looking at energy, strong day here as well, just over 1%. Got above my level, 48.56, so maybe look for a trade in here up to that 87.37 level. You got the 144 EMA sitting up there at 86.13, but potentially a covered call trade, step towards bullish. RSI looks good there, and that would be a pretty classic trade. Just get above the level, hold the level, and rally up as a potential breakout trade. So we'll see. I'll be watching this one tomorrow to see if there's any value in there. I still like energy. I continue to say that. It did have a pretty weak move here in the beginning of January, but since then it's been strong. Moving over to transports and industrials. Transports having another really strong day. Hit the trend line like we thought that it would. Now the question is what happens now? So the trend line sitting there, clearly rejected from there last time. Next resistance is 267.50. Let's go full screen on that one so you can get some perspective. You can see that 267.50 is the peak high from March of 22. So we have definitely pushed up to those levels, starting to get into a zone where we broke down last time. Not at all-time highs yet, but it does seem to be pushing in that direction. That would give you about another $3.50 of price action if we did break to that level. And then your all-time highs at 282.41. Transport's looking very, very strong, but at a critical point of resistance. And then looking at industrials, another bullish day, but only 0.02%. Really looking for a break to that next trend line, similar to this move on transports. That is trading up around 118.32. This is all-time high here for industrials, so no levels really to work off of. My next level to the downside is 116, but looking for that break up to the 118 area. Moving over to breadth. 20-day average showed another bullish day. Interesting. We're right at that 9 EMA. If that breaks, you're looking for the 55 up at 68.97. We'll see if that happens. Momentum bullish, RSI slightly bullish. 50-day average down slightly on the day, back below 62.25. That does not look great, honestly. That looks like a potential setup for another bearish move down to the 200. And then if we touch that again, usually the second test breaks if it's going to do it. So that would put you down to 52.81. This definitely looks a lot weaker than the 20-day average, which does look slightly bullish. So a little bit of mixed signals on breadth, but either way, these breadth indicators are not rushing higher the way that markets have been over the last few days. Moving over to yields, 2-year and 10-year both going higher. So 2-year pushing up back to that 4.5 level. Broke the 55 EMA, momentum bullish, RSI bullish. I kind of thought we might hover in the same zone, but it seems like we're headed a little bit higher here now, up to that 4.5 area. If that breaks, then there's quite a bit of upside potentially to the 200, up at 4.7. And then you got the 10-year going higher as well. It does continue to go a little bit higher than the 2-year each day. You can see up 0.1 versus 0.04. We're right at the trend line. If that breaks, then you have next level up around 4.25. then you got the 144 EMA at 4.28. 10-year continues to look like it's going to break higher, head towards normalized conditions. It's just taking a long time to do it. Moving over to the dollar did find a little bit of a base at that 144 EMA, continues to hold that level. You can see it here on the daily chart at 103.98, continues to hold, perked up right to my level, 104.41, broke down from that level, and we're sitting right back in that consolidation. This still looks a little bit bullish to me in terms of structure. We're above all the EMAs and SMAs on the daily chart, so that's bullish. They're not in order yet, but it does seem like we're headed in that direction. RSI perking up a little bit. Seems like we're still seeing a little bit of dollar strength, even though we got a bit of a rejection off that initial test. Moving over to bonds, J&K continues to sit right in the middle of this range. Basically no movement there. TLT, on the other hand, breaking down 0.58%. Momentum bearish, RSI bearish, volume picking up on that down move. Like I said, I think yields are going higher, so TLT should be headed lower. It did hit the trend line and bounce a little bit, so that'll be interesting if we get a little bit of a follow through off of that bounce. I wouldn't expect it, but it's something that you could watch for. Like I said, the structure still looks bearish to me. We're now double testing this same level here, and if that breaks, there is a lot of downside potential to that 89 level. So looks bearish to me on TLT as yields look bullish. Moving over to the VIX was down a little bit more on the day. It is still holding that 1275 level. Let's look at it on the shorter time frame. Bounced slightly, broke back down to that level. Next lower down at 12.3-ish. We'll see if we can break to that level and see if it holds there. But momentum bearish, RSI bearish. Everything continues to break down here on the VIX, indicating a little bit more upside to come. There's no real structure. This is just breaking down. It took out all of the levels. So not much to say here on the VIX. Just looks bearish as markets go higher. Moving over to my accounts, you can see I didn't do anything on the day, and that was fine. Everything was up on the day. This is the only position where I'm a little bit hesitant. Like I said on the IWM, if that area breaks right where it's at, I'll potentially roll this out and try to capture a little bit more upside. I was concerned that the structure looked bearish, and then we kind of broke that structure, and we're at basically my max profit already. My max profit on this position is right in that 195.26 area, so we're about $1 higher from there, but I'm at 29 days, so I could absolutely roll out a whole nother month if I needed to potentially capture some upside while still giving myself a lot of protection on this IWM position. And then looking at the Qs, no changes here. Max profit on that position up at 436. Got another bullish day, so you like to see it. Got the profits there, and just being patient on this position. And then with the TQQs, no changes here either. Still holding that 56 call for 8 days from now for $3.30. Markets were up there a little bit. The max profit on that position is 59.33, so that gives you about another 80 cents or so on that position, or $80 on that position. And then I have about 20 cents left on this put. So everything is still bullish, still holding in there. If I were to take this put off tomorrow, that would give me some opportunity and some cash left over for a potential energy position. That is what I'm watching for tomorrow's session. I do think energy at that 84.50 level is interesting for a potential move up to 87 over the next week or so. Let me know down in the comment section what you think of the markets or the charts. Can we just continue higher every single day? And what is currently driving this price growth? Is it just multiple expansion, or are we just in this constant uptrend until we get options expiration next week? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.